What's going on, everyone? Welcome back to this Forex forecast. For this particular instance, we're going to be focusing on a single pair. The reason why we want to do that is so we can place a little bit more emphasis on understanding why we're interested in a pair, why we've entered the pair, and what we're seeing altogether. So if you've been following us last week, you know that we've been looking at USD Swiss franc. We actually did end up entering the trade several times, taking profit each time. And now we're waiting for a deeper retracement, which finally triggered, so that we can actually get in towards TP1 and possibly even TP2. Now, before we actually break down this pair, I do want to say thank you to our sponsors real quick, and that is you for liking this video, sharing the content, making sure that other people see it, satisfying the algorithmic gods. That being said, once you guys have liked this video, we can go straight into it. And right now we're looking at USD Swiss franc with a descending trend line, both on the monthly time frame, which is seen right here, and on the weekly time frame. Now, this descending trend line was tested once and twice with 3 points confirming a trend line. In addition to that, it being on the higher time frame. Higher time frames are historically seen to be a little bit more significant than lower time frames. In addition to that confluence, we also have a structural support and resistant area, which also lines up with the 61% fib of this weekly leg, and then also the 78 fib of this monthly leg. I might have had that backwards. 78 weekly and then a 61 monthly. Yeah, sorry, I switched that up backwards. In addition to that, we have, like I said, this structure. As you can see right here, we have support, 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 resistance, and then resistance once more. In addition to that, we do have this descending trend line. So that's why we were interested on getting in on this pair. We did have a lot of downward momentum on this trade, and we were waiting for a confirmation at this zone before we actually entered the trade, which was our entry conditions for this strategy. Now, what was happening is we were monitoring here. What's going to happen is when price comes down, when we entered this trade, because we already got activated, our limit got activated, we're waiting and monitoring this area of structure, mainly because it is in fact a major support zone on the monthly time frame. If we do get signals of reversal, we will end up closing the trade manually. And just to show you what that would bring us, that would be a 1 to basically 2 risk to reward ratio. However, if there is a continuation pattern forming on the lower time frames, we will let it run its course, moving the trade to break even at that point so that it can hopefully get to TP2. And once again, moving the trade to break even if we were wrong, worst case scenario, we're covering our commission and swap charges. But on the other side, if we are accurate and we do decide to continue, let it hit its course on towards TP2, we are getting a 1 to 3.62 risk to reward ratio on this particular pair. So once again, we had covered this pair last week, entered it several times with taking profit each time. Now we moved our entry a little bit lower, just triggered our entry from the sell stop, and the sell limit, moving and adjusting our stop loss parameters above this area of structure. And now that it is triggered, we are going to let it run its course and monitor this TP1 area, which also happens to be major support zone on the monthly time frame. If, like I said, there is a continuation pattern forming, then we will let it run towards TP2, moving the trade to break even. Otherwise, we will end up closing the trade manually if there are signs of reversal on the lower time frames. So that's it, guys. I appreciate you guys checking out this video. Hopefully it was informative and useful for you. Once again, please be sure to like and comment your ideas down below. Not only does it support us, but it also helps others see this content as well, so that they can also benefit from looking at this analysis and understanding so that they could benefit from this analysis and then also get education from this analysis. So that being said, make sure to use proper risk as always. These are some crazy times right now with the corona. outbreak, making the markets do a lot of volatile things. So be sure you're using proper risk. Be safe out there. Good luck, guys, and I'll see you guys in the next video.